Morning to any replayers. If you're a replayer, don't forget you can still participate. You can follow me on Periscope, swipe right on Apple or up on Android. You can, of course, tap on the screen for hearts. And you know what hearts are? They're like claps. Like if you think what I'm saying is at all valuable, thank you for the hearts, then please tap on the screen. It's like energy, sending energy my way. Anyhow, and you can always ask questions on Twitter and Snapchat if you don't get a chance to ask them in the broadcast. So, good morning. Good morning, friends, and welcome to Monday. I hope you had a good weekend, and we are Monday. So, Monday we talk about mint. If you're new to me, my name is Joannazarach. Thanks for the hearts, Rosella. If you are new to me, my name is Joannazarach, and I do a daily broadcast on money habits at 10 a.m. Chicago time every single day, 7 days a week. Why? Because money never sleeps and habits need to be done every day. And so, thanks. And the thing that I harp on, like more than anything, so if you've heard this message, you need to hear it again until you really are into it, and until I'm using Mint every day, and I'm marking all my transactions. Not what I do, right? I want for people to get in the habit of using Mint, use it every day, and you may think I'm unreasonable, but I can tell you that you doing something every day is a lot easier than trying to do it once a week. Kind of like exercise or good nutrition. I know I've been thinking a lot about personal training analogies to this, like the personal finance coaching. It's very similar, right? It's like the advice that people should give you. By the way, when people like try to sell you the quick fix or the solution that you just do once, like set it and forget it, it's kind of like the Shakeology thing or the Beachbody. I mean, it's not bad. It'll get you there, but it's not sustainable. It's not something you're going to be able to do it yourself. So I'm a big believer that everybody can do it themselves, and I was just telling my husband this morning that I suffer through it so that I understand how difficult it is for you to do what I'm asking you to do. So. Mint. All right. So mint. I do indeed. Hi, how are you? I do indeed log into Mint every single day. Sometimes it's multiple times a day. And you may ask why. Well, it's a habit. It's kind of like checking email for me, or checking Facebook, or anything that you do habitually where you're like, I don't want to miss anything, right? And so a lot of times, like, there's really nothing to miss. And the reason is, for me by now, is because I do it all the time. So what I do is I mostly like look at transactions and everything, and I have enough, I like to say. I've solved a few parts of the equation. Like income, taxation, investments, and all that stuff that I talk about. I talk about them because I've had a lot of experience solving them myself. I never handed over my money management to anyone else. So, like I said, I suffer through it so that you can too. No, it's just really empowerment to get you to do that. And over the weekend, I talked to somebody about their investments and how they were talking to their financial advisor, and their investment portfolio was really way down more than the market. And I'm thinking, man, you're paying someone like a lot of money to give you bad news. Whereas in fact, you can get equally bad news and not pay them, which means you would have more money because the market is just the market. So I do want to talk about the investment sections of Mint.com. And you may say, what's the investment sections? Okay, if you don't have any investments, then you may not have it, but I encourage everybody to open an investment account, like an IRA, right? So the investment sections is basically where you can link up all of your different providers. So a lot of the 401ks that you have at work, like if they're managed through Fidelity or something else, or, so you may be able to link through them. If you can't, I do want to talk about how you sort of track that, because there are a few that I can't link directly to, or that just, break and they don't update it. But here's what the investment section does for me. So when I look at the investment section, they're like, so I have a lot of different accounts, and some of it is just legacy. So what happens is, when you're older and when you marry someone with a financial, already a financial life, you're combining two financial lives. So it so happens that we just have and it's something that I'm working on to try to consolidate and roll over, but all of that takes effort, right? So I understand the pain of taking the effort to get your stuff consolidated. So before you get it consolidated, you can get a really good snapshot in the investment section. And so I will be the first one to tell you that Mint is a miserable tool to try to manage any of your investments. It just has no functionality whatsoever. And I'm not the only one who says that. Everybody says that. So actually, I find that like I need to find a different tool for analyzing my investment. The thing is, though, it's just not that necessary. So I haven't invested that much time in finding a tool that'll help me look all over all the portfolios over. And why is that? Well, I'm a buy and hold. Nope, no friends here. I mean, you can find financial advice if you'd like, how to manage your own money. And you need a friend. Everyone needs a friend. Okay, goodbye. Yeah, somebody else was looking for a friend. You can find friends elsewhere. Another broadcast. Wish you luck. So here's what I do. Is I am looking at, for the investment section, I'm really looking, я не говорю по-русски, no, нет, no, I have friends. But I'm only on here to give personal financial advice. So, so I have, so when I do, yeah, no, really, okay, so I can concentrate. So here's the few things that I do when I get into my investment section. First of all, there was the total, right? So, it's like following the stock market. I was showing someone how I do it. I go to basically like finance.yahoo.com, and the reason I like their website because they have all the three major the three major indexes are at the top. So I like remember one number, and I like to go by and seeing how that number goes up and down. It's the same with your investments. Like, so then there'll be some sort of total number, and I look at that and I go, well, how's the market doing? Again, I'm a buy and hold investor, so I'm never like looking to sell or panic. And what you do is after a while, you get used to your money going up and down in your investments. And that's a really important thing if you're going to invest in the market. You need to really understand that there's going to be fluctuations and volatility in the market, and you need to not let it upset you, right? If the number going down is going to upset you, you're going to have a really hard time. And what happens is that, like, because you're contributing, like if you're still in a working life and you're contributing, even when the market goes down, like you're still adding money to it. So eventually that number will go up. One of the things I really encourage people to do is kind of take an annual snapshot of where they are with their total portfolio and just kind of keep track in a spreadsheet where they say, like, here is where here is my situation at this particular point in time financially, because we are very much like we're very poor at the mental memory, and so you're not going to remember where you were. So it's really important to like do a review once a year and say, okay, here was my net worth, and or here's my investments. And then what will happen over time is it does go up. It's just the fluctuations sometimes are a little bit more than everyone's happy when markets go up, and I'm like, when the markets go up too much, that's a little too, you're expecting too much. And then when it go down, you're like, oh no, the world's ending. Like, expect the investment to be on average 8% return a year. And then you're like, when it's 16, don't expect it to stay there, but expect it to go down. And that's what happened in like 2013, 2014. And then 2015 came around, and like that started to turn around on a negative way. And then 2016, January, like everyone's like, oh, worst January ever, except for the last day when it went magically up. So don't worry about it too much about the markets, because you can't really control them, and you can't compete with people who are managing, and I'm not missaying this, billions of dollars. Like, there are people who are managing billions of dollars worth of investments. So all you're doing is you're just kind of riding the coattail, and to ride the coattail, you just need to sit on it and let it drag you along. So how do I use it? So I look at the balances. I just kind of like look at some of them. Some of them annoy me because they need to be rolled over. So it's like a nag for maybe my husband to do something. Some of them are like a little sad. Like, I invested in this one stock because I don't really invest in a lot of stocks. I do mutual funds, but this one, like, I really wanted, and like the investment hasn't worked out. But it's just a tiny little bit of money. I look at my kids' college funds are on here, and I always add to them. So it just like, I look through it and I'm like, yeah, okay. Because once in a while, you want to take an action on it, right? So it's, again, I don't pay too much attention to it. I just kind of go and I'm like, okay, that's where it's at. That's where the total. Do I need to take any action on it? And so, one of the things is that, like, if something breaks, if a link breaks, what you need to update it. So it's, again, this account appears to be closed. And it's like, no, this account's not closed, right? So it's something that I need to check on and understand, like, what's going on with my Vanguard account, for example, because that's weird. So that's it. Like, really, that's why I said, I do very little. I mostly do a balance check. If it goes way down, I'm like, hey, is something going on with the market? Or is like one of my accounts broken? It spurs me to take some action. But mostly it's just like, meh, it's just like money sitting in investments, because the psychology of money, for where I've gotten to, it's not about this is the amount that's going to buy me things. I see it as like long-term security, right? So that's like, this helps me do the things I want to do in life, because I feel like I've taken the steps to try to have this portfolio. And I think as you get started, I don't a lot. No, I don't move it around. Here's what I do in investments, my investment philosophy. I try to maximize any tax-deferred accounts, like 401ks. And again, I do an individual 401k, IRAs. So I try to make sure I'm taking advantage of all of the tax-deferred or tax-free accounts without the fear that somehow I'm not going to be able to use that money when I need it, because my emergency savings is completely separate. So I don't do a lot of movement. I do like a lot more buying. And I'll be honest, in the last couple of years, I've bought not a lot of stock, because I saw how high the market was. Because again, I've been doing active, and I say active investing, some people think of it as like buying and trading stocks. Hell no. If you read anyone at any sense, they're like, this is the worst way to invest. You cannot, as an individual investor, time or have more knowledge to buy and trade stocks. Even people who do it like as day traders, they can succeed and fail on a daily basis. So hell no, there is not buying and selling of stocks. I don't do options. I don't do any crazy investment. I don't do or borrow money to invest, no margin, all that shit. I've looked into it and I was like, this shit's scary. And it sounds like most people lose money. So I'm really like, contribute and keep, and it just grows over time. And since I've been doing it since like I was 22, it's had that advantage of time. And again, it's just like my rates have increased of savings, because it just kind of sealed where I need to live in terms of my spending, except for the children. Like I literally spent, what's the best that we'll start? Okay. You either have, because I don't know that you're working right now, but if you can open an IRA, like literally the simplest things you do is if cash flow is a problem, which means that you're not having a lot of extra money lying around, the traditional IRA is your best place to start. Now, if you have a 401k through work, do that. If you're a solopreneur, I would really say looking into and opening your own individual 401k through Vanguard. Again, everything through Vanguard. But I think if you have zero savings, it is to go to Vanguard and open an account. And it's an IRA, and you want to do a traditional. And why do you want to do a traditional? Because if a cash flow is a problem, you want to be able to deduct it on your taxes. I know, they're like, oh, tax is going to be higher in the future. I'm like, right, but you're not contributing because you don't have the extra money. And if you can write it off your taxes, that's going to be like $1,200 extra in your pocket, right? So that's why it's important, because I just went through this exercise. But yeah, so open a Vanguard traditional IRA, and then you're going to be like, which one do I choose? If you're just starting out, like literally like Vanguard Index, like broad market, like something that just says, something generic. I mean, and if you like, hey, I narrowed it down to these 3 funds, like which one do you think? I can be like, any money, mini money, mo, this one. And that's how, that's all you need to do. That taking the action to open your IRA and putting in a tax-deferred account before April 15th, because then you can count it for last year and take it off your taxes for last year. So you can actually get that cash benefit sooner. That's the most important thing you do. Whether you max it out, which is $5,500, or you just put in $1,000 or $2,000, it is that act of taking that step. And then you have an IRA. Then you have an open IRA. Then all you need to do next time you have a little bit of extra money, you go in and go transfer. Oh, I love Lending Club. I do. I'm a big Lending Club user. So I'm an investor in two ways. This is like my stock that's hurting me. So the only stock I ever bought was the actual Lending Club IPO. Why? Because I've been a Lending Club investor. So Lending Club. Okay. So one of the things that, I've been investing in the market for, some almost 20 years. And one of the things that I've gotten interested in the last couple of years is diversification. And so most people think of diversification within the market. And you're like, it's still the market, right? It's stocks and bonds. And so, I'm like, what's beyond the market, right? And so Lending Club is one of now is many. It's a peer-to-peer lending platform. And the best way I can describe it, that I'm a bank. I'm a bank that loans fractional loans to people within the U.S. So you might have heard of like Kiva, which does like micro lending to other countries, like people who are trying to get a loan to start a business. Well, Lending Club, and I think Prosper is another one. Those are all platforms in the U.S. that basically collect a very small fee so that individuals or institutions, it's actually quite popular, I think, with institutions, put up the capital to lend to individuals. And I'm always happy to go through. I can do a Lending Club Periscope because I'm obsessed with Lending Club. So actually, I do Lending Club every day. And people are like, that is so crazy because you can just automate it. I'm like, no, but I really love to see what are people applying, the people who are applying. So I'm like a individual loan approver, except like I only fund $25 at a time. And people are like, wait, you making loans that are $25? I'm like, no, like when 100 people each loan a $25 loan, that's $2,500, right? So people come to Lending Club to mostly for 3 or 4 reasons. They refinance loans, like their credit cards. So it's like one platform is for credit card refinancing. Some people try to fund like the small business loan. So it's a lending platform where individuals apply for loans, but they're funded by other individuals versus like a bank has a capital base that they lend out of and they make a ton of money. When they have the minimum balances so you're not, you don't have any fees or they incentivize people to keep money in the bank. That's because they want to lend that money out at a much higher rate. So Lending Club is a platform, so it's an alternative form of investment. Now, it is limited to accredited investors. What's an accredited investor? I think, don't quote me on the definition on this, but I know it's like you have to be earning like $200,000 a year over so many years or have $1 million in investable assets, which is like not your home value. So you have to be an accredited investor. Now, most people don't realize like there is not like an agency that like tells you that you're an accredited investor. You're basically like self-certified. So when, because they really don't want people who like don't have the money to put at risk, because when you loan out money, like it's a loan. So when people don't pay, and by the way, a lot of people don't pay their loans back, it defaults, right? So there's a portion of your principal that gets lost. So anyway, I'm happy to talk about Lending Club because it is definitely an alternative investment. I have started investing in it in 2013, and I started slowly because I was like, I don't know how this works, right? And developed like this little system that I use to do the loans. It's right now my personal rate of returns 8%, around 8%. It hovers, like if people default or not. And so it's diversified away from the market. So like this last year, the market was doing crappy, but my Lending Club investment returned 8%. But if the economy tanks, then the Lending Club investment's going to go down because a lot more people are going to default. I am from Chicago. I am in Chicago. I live in Chicago. I don't know if I'm from Chicago because I'm from Poland and the East Coast. I've been in Chicago for a really long time. I don't know, 11 years or so. So Lending Club is definitely an alternative investment, and I do recommend it. If you are an accredited investor and you're looking to diversify, I would seriously look into Lending Club. I think I haven't used the other platforms, but Lending Club's been around the longest, and it's I find it a very good platform. So if you do want to find out more about it, like I can definitely do a Periscope about it because I've actually thought about doing Periscopes where I like do my loan selection process and like speak out loud the thoughts I have about people who borrow and their conditions. And you can actually learn a lot about, because the pieces of information you get is like their income, how much they want to borrow, what their repayment's going to be, how much they have in credit card debt, what's their credit score, what's their, profession and what state they live in, and then like how many defaults they have, what's their what's their history, like people who don't repay, and then like I never trust anybody who works in finance and has really bad like repayment history. A couple thousand, something like that. So it hasn't been like, again, I'm kind of tiptoe, like stuck my toes into it. I'm probably going to add a little bit to it. But again, it's priorities, right? Because I don't have it in an IRA. I have it like a purely taxable account. So I always fund my other stuff, and I've thought about maybe putting it in an IRA in Lending Club. I don't know. That's like very sort of technical. But that's really the whatchamacallit. That's the thing about Lending Club. So there are other alternative investments that I want to learn about, but I don't know if I'll participate, like angel investing, right? And I want to do it for Angel Co. So I'm a kind of like a slow, can I come through? Jonquil Park. No, I don't think so. And so there was a so for a lot of the investing, I really try to understand, like, not just how it works in terms of the theory, but also how it works, like how the mechanics of it work as well. So that's the thing about, Lending Club. It's really taking me a while to figure out like how exactly does it work, and like what's the timing, and like what's the actual rate of return, because most defaults don't happen when you lend out. The lending robot. I don't know. Is that a different platform? I can Google it. Or are you talking within Lending Club? And that's why I kind of do automated investing in peer lending. Oh, I have not heard of Lending Robot, but I just Googled it, so I'm going to research it and invest like a bank. So, we automate investments. You know what? I don't know about it. It like depends how much time you have. Like, so I'll be first to admit, I kind of like to micromanage my investments a little bit, and especially when I don't understand them. So, for Lending Club, it's like a combination of not just investing, but I really like learning about how much money people make, in what professions, and then also the behavior of them. And so, and I know there's a lot of those peer lending things that are going away from just the credit score to do the like risk assessment and of the borrower. And I actually do that myself ever since I took the big data class that talked about how your like the likelihood of default has nothing to do with your past history. I mean, maybe a little bit, but it's more to do with like likelihood of you losing a job. And so, like, there are certain industries that people work in that are much, like, higher job retention, like healthcare, for example. Anyone in healthcare gets my money. I'm like, oh, you're a nurse? You're going to have a job forever. Fund you, And then I look at some people who I'm like, I don't know about your job, like security in the next 3 years, because I do a 3-year loan. So that's like I think that can be programmed. And I'm imagining, yeah, see, like, I look at the lending robot, right, and I'm saying, okay, they take 0.45% from that. Do I want to pay that? Like, I'm cheap. I want to be like, is it worth the money? And maybe if you have a small, again, so it depends on the size of your investment. But if I can do something for 5 minutes, and it's kind of like edutainment for me, which is educational, entertaining, then I'll do it. And so I do it myself because I kind of like, I like coming up with my own system. But I think Lending Robot's kind of interesting for people who want to have a bit more help. But again, when you get help, you pay for it, right? So you have to make a decision about it. So that's it. And I know we got a little bit on a different subject when it comes to Lending Club, but you did ask me about my favorite favorite alternative investment and something that I do every day. So I was happy to talk about it. But yeah, bottom line is the investment section of Mint, purely for balances, purely to make sure that they're all connected, and to plan out like what moves do I make. And I just mean in a very general terms, to be like, okay, here's what I need to do, make a plan. Maybe it's a long term, maybe it's the next 12 months, if I am going to roll something over, like where it's at right now. But mostly it's just like place where I add stuff. This is like where my money hangs out. And it's like a very long term. I have a very, very long term view because, again, money's buying me security, not things. So That's about it. Like I said, if someone else uses a tool that's good for investment, aggregated stuff, and I think that personal capital is supposed to do that, and that's on my list of things to try, then I'll definitely try. I really liked Future Advisor when it was out for a little bit. I think they got bought, and I haven't really logged into that account, but I thought it was a kind of a neat way where they analyzed your entire portfolio for you and said something about it. But it really changed what I did anyway, because I feel like my strategy is being tax smart and investing over time. And I'm not going to outsmart the people with billions of dollars and the market makers and the high-speed trading people and everybody else who's trying to extract fractional value from the market. Yeah. Go ahead. I'm going to take a coffee break. Say hello to my dead dog. His name is Pitch. My kids love Pitch. But yeah, when it comes to investing, you have to have the capital, right? We always talk about creating a buffer and then creating the difference between your income and your expenses, and then getting and then doing. I don't even think you can do a joint IRA separate. Everybody should just have their own IRA. I do think it's an individual thing. Each one of you can open your own. So if you could maximize them, then you would be able to contribute $11,000 a year. And I would aim for that. And I understand that that's like a lot of money. But each of you earn, yeah, that's okay. No, it seems like, like a joint bank account. But no, it's an individual retirement account. So it's only for one person. So I'll answer this 2 questions. One, everyone should have their own, and if you're very egalitarian, you should each open your own and put equal contributions. Here is what, and I know you guys, you and Terry are good, but here's what happens. A lot of times one person holds retirement accounts in their own name. And what happens when it comes to divorce is that it's really hard to get. So it's not again, it's not to say people will get divorced, but everyone should own retirement funds in their own name, because it's so much easier to manage. The other thing I like about individual retirement accounts, the beneficiary, you don't need to have a will to designate a beneficiary. It's passed through as the vehicle. So yes, so the 2 of you, if you're equal, open your separate accounts and just contribute equal amounts. That's what we do. But then for anybody else where you're like, well, my spouse has a 401k, I don't need an IRA. I'll be like, and it's mostly women to say, I'll be like, girl, you need your own account. Because in a divorce proceeding, it favors the owner of the account. And then also beneficiary-wise, right? Anyway, it gets into more complicated things, and the life stuff, but, accidents. But I always encourage people to own their own money, and if you have a pool, just split it up. Don't be like, oh yeah, your 401k at work, we're going to fund that before we fund IRA. The goal is to create enough extra funds to fund everything, but just open both of them. And again, do it through Vanguard. It's your lowest cost option. It always will be your lowest cost option. If anybody wants to argue with me, I'll bring the numbers. And so that's it. Yeah. So, and if you have any questions while you're opening it, when you go through a process, because you can open it online. It's a really nice process. And if you ever call their phone numbers, they are super duper helpful. I have found the Vanguard customer service to be exceptional over time. Like I said, I've had them since I was 22, but they are really about low cost. So they have a lot of online forums. You can look at what it takes, but I would encourage you to just go ahead and open an account. You can open it, fund it, see what their minimums are. And if you're not sure what stock market, what index stock you want to invest in, you can just put it in a money market, because the contribution is the most important thing, because that's going to get you the tax refund from a traditional IRA. And again, if you're like, oh, traditional versus Roth, again, if you're in a cash crunch, do a traditional, because it's going to free up some money. And until you're in the super extra surplus of cash where you're like, oh, I need tax strategies, then don't worry about it too much, unless you have a clear vision of how much more money you're going to make when you're older. So if you're in your 20s and you're like me and I'm on this path And I'm like, if you can, if you're not so concerned about the cash flow right now, then surely Roth is a good tax strategy. But again, tax strategy is like 5 steps beyond where people like who are in a cash flow crunch need to be worried about. The first thing is to open and contribute and get the tax advantage. So, all right. Always happy to answer questions, whether they're on topic, off topic, or just the various topics around money. And do report back. Like nothing makes me more happy than someone's like, I opened my IRA, which one of my listeners did on Friday. It's her first IRA. She's in her 40s, and she opened an IRA. So that's what it takes, right? That's my hand-to-hand combat in getting people on the right track when it comes to personal finance. So I'll catch you guys tomorrow. Changing lives, right? Like one at a time. Because the one life at a time becomes the voice of why I do this, right? Like I feel like I'm like a lone voice. Yeah, thank you, Rosella. I feel like I'm a lone voice in the wilderness of people who are who have, like, again, what I talked about is mixed intentions. And it's not because they're bad people. It's just that that's what they're being incentivized for. And so if I can get more people to go, yeah, you know what, I did that. And I looked where I am 12 months later, and I followed these three steps, right? 3 steps consistently, and I'm better off. And I want you guys to be the voice of, like, yes, do this. Because again, that's why literally I was like, why do I struggle with taxes? Taxes are such a pain. It's because I want to tell you, like, I know this is going to help you, and this taking interest in this is really the only way to battle it. And it doesn't have to be to the degree that I do, but because I do it to such a degree, I want to give you guys just the directive, right? The answer, the clear answer, versus the consult your tax advisor and your financial advisor and your, and you're like, if you had that army of people, you wouldn't be listening to me, right? Like that just annoys me. And again, I'm not ever going to give you specific investment advice where I tell you which fund to invest in. I will give you my opinion on a group of funds, or I'll tell you the facts about where things are, because the SEC does regulate these things where, I'm not going to be like, oh, you should buy Facebook today. Hell no, I'll never tell you that. And again, I don't do that. I don't buy individual stocks, because that's not how people who are not in finance accumulate wealth. It's just well proven, like, that's well researched. So I just tell you guys what works. And I give you the directive of, whatever the muddled pieces of information. I'll say, here's the thing, here's what you're going to get out of it, and take action now. And the rest will follow. So, signing off. See you guys tomorrow. Thank you for the hearts. I will catch you guys 10 a.m. tomorrow. And tomorrow we're going to be doing Money Matters. What on? I have no idea yet. No, I don't. Risk. That's right. Tomorrow's Money Matters is going to be on risk. And risk is something that's discussed, except when someone's trying to sell you life insurance. But I want to talk about risk in very real terms, and how you can mitigate it, or how you can think about mitigating it, because you need a plan for your risk management. Okay, bye guys.